Before we get into today's video, I just need to remind everyone I'm not a financial advisor. You must do your own due diligence. Please take everything as entertainment only.
No such thing as debate. Now it's light. So I've begun.
What's the crack, everyone? Welcome back to Buy Wholesale. I hope you are all well. Before we get into today's video, can you please like and subscribe to this channel? We're trying to grow it, guys. You know the situation. You really help me out. Thank you to everyone that has subscribed. Also, you can go in the description below to check out my link to Routers. Have a good read at the article that I done a couple of months ago. Plus, you can also find a link to Free Trade, where you and I both get a free share up to £200. So anybody that's thinking about setting it up, their journey, or perhaps even looking for an extra account to have a bit of diversity, that's where you can find that link. Get me on Instagram as well, guys, BHSDMV, and you can also get me on Twitter at the Mendez now. The Twitter vote is a weekly thing that I do on the Twitter, so it's worthwhile following so you can get involved and cast your vote. Last week's vote was done and we actually had a joint winner in Kibo Energy and Blackstone. Today's video is going to be on Kibo Energy. The reason being it's located in Ireland, so I thought, well, do a stock a bit more closer to the home. We're going to go over roughly what the company's about, have a quick look at the financials, see what the chart is, and I'll let you know if I'm going to be investing in them. Regardless of what I say, of course, you must do your own due diligence. Without further ado though, let's get into today's video. So if we just jump on the Kibo Energy's website, then we can have a look and see what they're about. So Kibo Energy is progressing an advanced portfolio of power generating and mining projects in Tanzania, Mozambique, Botswana, and United Kingdom. So if we scroll down to the projects, the Benja power plant is coal. I'm not interested. Coal, not interested. Coal, not interested. Coal, not interested. Kibo annual report, we'll have a look at that in a moment. Mast energy developments, actually had a bit of a look at this here. It seems like an interesting enough sort of project that they're talking about doing here. Obviously it's at the early stages. Kibo's interested 60%, but the next steps are completion of due diligence and completion of acquisition on first sites. So early conception stage, not going to make any revenue from this, and it's going to take a lot of financial modelling, and looks to be to do with gas and moving about the national grid. Close to home, maybe a bit of interest there, but again, nothing worthwhile jumping into for me at this stage. The Kibo annual report 2019, so you know you've got, it's sort of 2 years old. Not too sure why that's there. Corporate presentation, well, I'm not going to listen to them. I'm getting a bad feeling about this one already. But let's get straight into it. Let's have a look at the annual reports here. So the Kibo Energy annual report was 2019. Then we have the half year results the 30th of June, up to the 30th of June. So where's the other half a year? So we haven't got more updated financial statements. Must be the full annual report then due. But that's 2019. Year end 31st of September 2019. So where's 2020? Okay. I'm not even sure if there's any point reading it. Okay, so we'll have a look at the most recent ones that we have on their website then. Momentum, okay, so what momentum have we got here? The renewal of the MOU EDM demonstrates Mozambique government support for Benja. Okay, terms of negotiation of 200 megawatts resources sign. Okay, terms of negotiation, feasibility of increasing planning, feasibility studies. So conception stage, early doors. So board's commissioning now scheduled for quarter 2021. Okay, so we'll check that out and see if that's hit its target. Listing and IPO preparation for Med, well advanced and scheduled for completion before end year. So another target that we will need to check. So they've raised more funds. Again, not against raising funds if it means that we've got progress and stuff going on to the company. A lot of the penny stocks, a lot of these ones that we're talking about, they're all raising funds. So we will see what if they've hit these targets. So they're talking about COVID-19 having an issue. That's fair enough, I suppose. So here's your statements here, and then the losses for the period look like they're coming down, but you have to bear in mind, look, they haven't done any exploration. They're saying COVID, but I mean this looks to be a mess. So more dilution of shares, you can see that that's increased. Not much change in the assets. I'd like to know what this 1.1 is about. So they're borrowing more money. So the liabilities have grew, which isn't good, guys. You can see that their borrowing has increased, and total equity and liabilities has increased. Looking even further down, it seems to be a lot of money moving about, and we'll have to see if these things that they talked about have come to fruition. So we can go down here and look at some of the projects that they talked about here, and it looks to be hemorrhaging money, guys. No money coming in. You could go through and pick bones through it, but I'll just even go down here. The growing concern. The group currently generates no revenue and had net assets of 28 million as of the 30th of June 2020, 31st of December 2019. Net assets is 28.2 million. The directors have reviewed budgets, project cash flows and other relevant information, and on the basis of this revenue and below, they are confident that the company and the group will have adequate financial resources to continue operational existence for the foreseeable future. Well, that's positive enough. Following the proposed capital reorganisation, the company has access to sufficient funds to continue the development activities in various projects. In the event that the company is not able to raise further funding and before mitigating actions are taken, the company has sufficient funds for its present working capital requirements for the foreseeable future. Okay, so I've googled reportedly commissioning. I'm looking to see, they said it would be commissioned in the first quarter of 2021. We are on the 20th of April. Don't see anything that says anything to do with it, guys. I've had a bit of a look around, so to me they haven't hit that target. Okay, so the listing and IPO preparation for Med well advanced and scheduled for completion before the end of the year. So we do actually have a bit of an update on that, but it wasn't by the end of the year. It was about 4 months later. We've only just recently received this here, and you can see the 29th of March, 20 days ago. Kibo Energy, the multi-asset, blah blah blah. The Solarius quote, the CEO of Kibo said, with strong institutional and retail support having raised in excess of 5 million, MED looks forward to listing on the London Stock Exchange on the 14th of April 2021. Thereafter, it will hit the ground running, rapidly building production and strengthening its position as a key energy provider in the UK's transit renewables. So Med is currently 100% subsidiary company of Kibo Energy and the 100% holding company of Salone Developments. So it came on at 16 pence and it's down to 14. So they're able to get that through. That is a company now live. It's only been going about a month, but it has went on a downward trajectory in the last month, as we can see, just a steady decline. And just like Mast Energy, I'll not even need to bring up a detailed chart. I'll just go quick Google of Kibo. You can pull it out. You can see max chart. We can go back here. We can see 2010. So with about 11 years of this company, it isn't profitable after 11 years of giving it a go. You know, it did have good highs back in 2011, but it's just been on a downward turn, guys, and it really has wee moments of flourish, maybe when, you know, a bit of excitement gets about it, or a wee bit of news, or just a bit of a pump and dump. But to me, guys, it's just been onwards, down, down, down. We can see on the year it is up. So you're up 18% on the year. 6 months, it's up 42%. 1 month it's up 1%, and in the last 5 days we are down 23%. So yeah, that tells the story. Okay guys, that's the video. Kibo Energy, Mast Energy, either or, I don't want a part of them. As simple as that. Probably my enthusiasm kind of told that. It's a dying sector. Energy grid stuff, okay, yes, we'll always need that, but I'm a big believer in renewable energy, so they don't seem to do anything in that sector. So I don't even see how the future looks big for them. Coal's a dying industry. Everybody and their granny knows that that's a dying industry. So there's no catalyst where I can go, look, this company's trugging along. It's not like there's other ones that I've reviewed where I'm going, well, the company's truggered along. You know, why is it not profitable? It's had moments of flourish, but it's a good sector that they're in and that will prosper. So you're sort of rolling the dice that, okay, their financials are dire, but, you know, hopefully now going into a better sector, there could be potential for this company to go. I don't mind that. I don't mind that the financials are terrible, especially when these high risk penny stocks. But when you have all the bad financial stuff that comes along with these types of stocks, and it's in a dying sector, I don't see any reason to be investing in Kibo or Mast, even with their new thing. It looks all a bit suspect to me. You can go on and see what the CEO is being paid. So the CEO is currently paying himself a hefty £250,000 a year, and with the other technical directors, you're close to £400,000 for 4 people's wages a year in a company that's making no profit. Now, if I was passionate and I was a CEO and I was invested in this company, and the CEO's been here for 9 years, bear in mind that 9 years he's been here, he's not delivering any profit, and he has taken substantial money out, dilution of shares. To me, the whole thing stinks. I don't want any part of it at all. I'm not recommending anybody to do anything, because of course you must do your own due diligence. You can see from the charts that there could be a moment of jumping in here and you could get a 30% rise, but at the same time you might as well go to the slot machine and put your money in and push that thing, because it is a gamble. There is no way around it. Like I said, the other stocks I'm reviewing at least have big catalysts that I believe could go forward. This, I don't see anything, guys, unfortunately, and that's for Mast as well. Not that I've looked deep into Mast nor Kibo, to be fair, but even at a high level, it stinks. So why look for a gem in it? If the main thing doesn't read right, just get away from it. The website doesn't have pictures that loads. It doesn't have more recent financials. It's just lazy from start to finish. There's nothing that I like about either of these companies, guys. So that's the video. Hope you have found it informative. Whoever voted for Kibo Energy, I hope these aren't invested, and I hope that this has brought you some guidance. But if anyone's hoping for me to pump and dump this and get this raised up, I'm sorry to disappoint you, but it is what it is. Like I said, I could be wrong, of course, but it doesn't give me any sort of warm fuzzy feelings. So yeah, get me on Instagram, BHS, DMV, like, share, subscribe to the page, all that good stuff, guys. Get the next Twitter vote, and I'll be putting that up tomorrow or today. Hopefully at some stage you can cast your vote for the next one. And until next time, enjoy the rest of your day. Peace.
Yeah. Coincidence. Yeah. Coincidence. Something that happens by chance, I think not.